We're back on the field, everybody. Welcome to Jacksonville's Retirement Coach with Adam Wolf, the president, CPA, and CFP of Wolf Retirement Navigation. And let's just underline that word navigation. We talked last episode about the U.S. having not so great a grade as far as retirement goes, and Adam really dove deep into what the three pillars of retirement are, three parts of the stool, if you will, three legs of the stool, and then five major risks. So check that out in our previous episode. And hey, I say Adam. Yeah, Adam Wolf is the host here today. You could go get with him and his team at wolfretirement.com. There's a free portfolio analysis you can have right there. I'm your co-host, Doug Turnbull. I'm based out of Atlanta, of course, as you might expect. Adam based in Jacksonville. And Adam, we're deep into November here, so that means before we get to tax planning, which will be what we talk about here in a second, we're also year-end getting ready to carb push, okay? Because it's time. It's Thanksgiving. It's on the horizon. I love a good home-cooked meal. I love having that with family, and I would love to hear about some of, maybe not your traditions, but what you have on deck here for November, because it'll be a big time for you guys.
Oh yeah, we a lot of our clients are aware and friends are aware. This is a 9th annual Tony's Turkey Trot coming up there in Atlantic Beach. We are the usually the main sponsors or one of the main sponsors, but we've been involved for 8 of the last 9 years. So we were there when the first race had 80 runners. This year, we're expecting 5,000 racers, all within the little downtown Atlantic Beach, Neptune Beach area. So if you're still needing tickets or needing an entry, give us a call here at the office. You talk to Andrea, talk to Robin. We have some additional tickets available. And so what I do, as y'all know, I wobble. I don't run too fast. I'm a big guy. But I do make it and I do complete it. I do my 5K. And then I give myself grace to be able to eat whatever I want to after that. So, yeah, we're going to host this year for Thanksgiving. I'm going to have my aunt, come down from Philly, and my sister's coming down from Charlotte, and, my family here. So we're going to host it this year and do takeout from Sonati's, which does a great job of all the turkey, the ham, and then all the sides. So and then I cook a salmon for the fish lovers. And we just, I'm getting hungry just talking about it, Doug, now. So, but yeah, we're going to have a great November, Thanksgiving.
So the Tony's Turkey Trot, is that what it's called, or is it just Tony's Trot?
It's Tony's Turkey Trot, and that
is on Thanksgiving morning.
On Thanksgiving morning, and we're racing, and so more information, just give us a buzz.
Yeah, there you go. Go to wolfretirement.com. And what is the benefit there? Usually when it's named like that, and there's something on Thanksgiving, there's some sort of nonprofit attached. Am I right?
Yep. Yeah, we're raising money for traumatic brain injury awareness. And so UF Health, they took over the race multiple years ago and have done a tremendous job. Megan over there has just done an outstanding job of getting the race to the level it is, and we're just happy to be a part of it. And Brooks Rehab are the recipients of tens of thousands of dollars of money raised from these events. So we do a great job for the adult rehab for adults and children with traumatic brain injuries.
That's an incredible thing there, and you can find out more about it. You can go in the community tab or in the community tab at wolfretirement.com, and Adam and the team would love for you to join in. By the time you're hearing this, maybe just the day before or 2 days before Thanksgiving, but still try to sign up and be a part of such a great thing. And really glad you're getting time to spend with your family there, Adam, as well I with mine on Thanksgiving. My wife, Momo, she's from Germany. She does not like many of the traditional Thanksgiving foods, so we're going to have our own little throwdown at the Turnbull Casa in Atlanta, Georgia. So we're right outside of Atlanta. All right, so now we got to transition into something. We got ourselves our salivary glands all going, talking about food, but really this is something right in your wheelhouse, Adam, and that is tax planning. A lot of the effort at Wolf Retirement Navigation goes into doing that, and I think that's because taxes in general are just such a big beast, and there's so many ways to tackle that and plan correctly, but particularly at the end of the year, Adam, there are deadlines people have to meet, especially if they're at a certain stage of retirement. There are things that may go into effect in 2025 that you want to take advantage of. So can you walk people through, when they go to wolfretirement.com and get their free portfolio analysis, some tax aspects they need to look at for the end of 2024?
Yeah, there's a couple here. So I'm a huge proponent of tax-free investing. And one of the last places on the planet to invest and grow your money tax-free and take tax-free distributions is a Roth IRA. And there's many different ways to get a Roth IRA. And one of the big questions is, well, how do I get one if I don't already have one? Or how do I add to it if I already do have one? So a couple of different ways to do that. One is, if you are working and you have wages or self-employment income, and you also maybe you're married and the spouse is working and you're not, and one's at home without wages, then the spouse can contribute. So you and your spouse, if you are married, you by yourself, if you're not, can put up to $8,000 over the age of 50. It's $7,000 if you're under 50. And a lot of questions I get is, okay, when do I have to do that? Do I have to do it by the end of the year? Now you can, but the government and the IRS allows up until the filing deadline, April 15th for many. Now, if you file your return in March and you still want to put your contribution in, then technically you're ineligible. So we'd have to do an amended return and some things there. We don't want to do that. Just know by April 15th to put your money in, but don't put your money in after you file your tax return. So that's one way to get a tax-free IRA. Another way is to do what's called a conversion. And so moving money from an IRA or a 401k into a Roth, you pay the taxes at that time. You never have to pay the taxes again. And you move money into tax-free that grows tax-free, and you take your money out of that IRA in the future, whether it's for you or your beneficiaries, tax-free as well. So in a nutshell, doing a Roth conversion, you have to do it by December 31st. So I like to look at, clients' plans in November to see how we look, to take a look at the tax brackets and income levels we're in, to do tax bracket maximization. If you're in the 12% tax bracket, and before you go from 12 to 22% or 22 to 24%, to use up what's left to pay the taxes at the lowest rates we're ever going to pay. In case you don't know it already, the government doesn't have enough money to run, and eventually you're going to increase taxes, in my opinion, significantly over our lifetimes.
No matter who's in charge. Can we just throw that in?
Listen, every two
results on the mind.
Every 2 years to 4 years, we have that risk of legislation changes, party Democrat, party Republican. It will not matter significantly because of the costs currently to run our country, mostly being Social Security, Medicare, Medicaid, interest on the debt. That is taking up the majority of our current number. So to get specifically, you need as an individual to move money from anything to tax-free is a smart choice. And that's what we help clients with. So if you have questions about it, give us a call.
Well, that's a great point. So that we have conversions here to do, whether it's the Roth IRA, just making sure you max out your Roth potential at the end of the year. And that has to be done. I just want to recap. By the time you pay your taxes next year, which goes all the way up to April 15th, but if you're like my mom or someone who pays it as soon as the door opens, you want to make sure you get that max to the Roth done.
Yeah. So it's when you file it. So when you file your tax return, that's the technical answer. And so, but most folks, by the time that happens, they're waiting until April 15th anyway. But to get that tax-free growth, the sooner the better. That's number one. Another one we can do is we look at, for folks who have to have required minimum distributions from their IRAs, from their 401ks. It used to be age 70 and a half, you would be required to take out a percentage. Now and then it got to 72, and now it's 73 years, and it's going to be eventually 75 years. So first off, figuring out when you have to take it out. For most people now who are getting ready to turn 73, they have to do it the year they turn 73. If you can technically do it till April 1st the following year, but that means you have to do not only the first one, but the second one. So you have to do two. That means more income, more taxes potentially. So I recommend people do it by the end of the year, the 31st. Now, why is that important? Because some people like to be able to, first of all, if you don't want to get in trouble with the IRS, technically they can penalize you up to 50% of what you were supposed to take out. They haven't made any examples of anybody yet. I haven't really heard of that ever happening, but it's in the rules. So to be concerned about it is a must. Now, if you say, hey, what can I do if I don't need that RMD. If you are charitably inclined, you can do what's called a QCD, or qualified charitable distribution, to get that money to your favorite church, your favorite charity, your favorite 501c3. You can't make up. I had a client say, "Hey, what if I created my own charity?" And technically, over time, maybe, but I wouldn't recommend it. So
it's a good way to get audited right then, right?
Yes, yeah. You don't want to do that. So. But
a lot of people, I've seen a lot of athletes and people, they do create foundations, and although that's great, and they usually just distribute the money to another charity after that, you do have to think there has to be some of their money that's going through that to maximize efficiency, so to speak.
Yeah, yes, exactly. And so what happens there is you take money that you would have received as a RMD from your IRA, and you send it directly. Your custodian, your Charles Schwab, your Fidelity, whoever you're using, sends it directly to the charity, and that reduces your income. You do not have to report the amount that you sent on your 1040 on your tax return, because it's not considered income. It's considered a qualified charitable distribution. So that's something to think about. And if you have questions about it, give us a call. We can walk you through it.
Yeah, well, and that is a great way to try to be charitable, to be a better citizen of the world, is to do something like that, and it helps you out on your end too. And look, there's so many things, so many levers to pull, and trapdoors, and mines in the minefield to avoid. That's why you have to get. I mean, it is called. I'm just saying it again. Wolf Retirement Navigation. If you're just stumbling along here trying to do the minimum, you're probably going to leave a lot of money on the table, I would think, Adam, and that's why they need to get in touch with you.
Yeah, Doug, I've seen it bunch of different ways. It's easy to plan and save $1, but also, just as important, we need to plan to not make mistakes, because there are so many little hidden things within the IRS code that can penalize you if you take your money out too early, or if you don't take it out at all. And so, saving $1, that's 100% return in my book. So anything we can do to save $1. Taxes are the number one expense for almost everybody in retirement, federal taxes, that is. And anything we can do to reduce it, keep more money in your pocket, is the name of the game.
So year-end tax planning here to recap there, and thank you for saying that, Adam. Maximizing contributions to Roth IRAs, converting at the right time, doing so usually by the end of the year, okay? So you do that without getting hit with a different set of taxes or more taxes, and then making sure, not even just maximizing, making sure you do your RMDs, required minimum distributions, so you avoid that IRS penalty, and you got the qualified charitable distribution within that. Before we sign off here, are there any other things that you want to tack on to the year-end tax planning checklist before they go to wolfretirement.com themselves?
Yeah, so this year, if you have, I'll call them brokerage accounts or non-IRA accounts, like whether it's Charles Schwab, Fidelity, whoever, E-Trade, whoever you're using, if you do have companies or stocks or funds that have lost money, you may want to do what's called tax loss harvesting. And what that is, you sell whatever stock is down, and then you also sell one of your winners, and that loss can offset the gain, and then you can buy back those stocks. If you really like the stocks, doesn't mean you have to buy it back, but if you really like the stocks, as long as you wait 30 days to buy it back, then you get that loss against that gain, and you get to basically start over with a fresh, cost basis and a fresh appreciation from there. It doesn't sound like a lot, especially this year after everything has gone up so much. You might not have a lot of, losers, but anything you can do on the edges to save money taxes, that's the key.
And look, don't look at it by yourself. Get Adam Wolf and his team there that have been looking at this stuff for a long, long time to look at your portfolio. Make sure if you have the right number or right ratio of losers to winners to maximize the tax loss harvesting. So between that, RMDs, conversions, and maximizing contributions to Roth IRAs, those are great things to look at before the end of the year. Get that free portfolio analysis today. Again, wolfretirement.com. Adam and the team want to help you build a plan and a lifelong partnership. So Adam, thanks for spending some time today. And hey, happy Thanksgiving.
Hey, happy Thanksgiving, Doug. Thanks.
I appreciate that. Well, folks, thank you for listening. And again, go to wolfretirement.com and get that thing set up there, get that consultation set up, or maybe you're actually one of Adam's clients. You just haven't made your year-end meeting yet. Time's running out to do so. Also, if you've heard this and you know people that need to hear it, be sure and subscribe, turn on the notifications, and let someone else in your circle know. There's been all sorts of good things shared here, and we're going to keep digging deep into those as we get in further episodes of this podcast. Adam and I, we can't wait to do that with you. So he's Adam Wolf. I'm Doug Turnbull. Thank you all for listening, and happy Thanksgiving to you. This has been Jacksonville's Retirement Coach.
Investment advisory services offered through Coil Capital LLC, a registered investment advisor. Wolf Retirement Navigation LLC and Coil Capital LLC are not affiliated. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining values. Opinions expressed are subject to change without notice and are not intended as investment advice or to predict future performance. Past performance does not guarantee future results. Consult your financial professional before making any investment decision. This information is designed to provide general information on the subjects covered. It is not, however, intended to provide specific legal or tax advice and cannot be used to avoid tax penalties or to promote, market, or recommend any tax plan or arrangement. Please note that Wolf Retirement Navigation LLC and its affiliates do not give legal or tax advice. You are encouraged to consult your tax advisor or attorney. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurer. Any references to protection or benefits or lifetime income generally refer to fixed insurance products. They do not refer in any way to securities or investment advisory products or services. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and not offered by Coil Capital LLC. Florida Insurance License Number W016816.